Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, I think you could either throw around a few adjectives or maybe a few expletives with regards to what is happening on the market. Yesterday was a prime example of insanity, although if you'd managed to catch the right side of it, you'd be smiling today. But what are your thoughts on the overall markets as we kick off the show this evening?
Yeah, it's been an incredible ride over the last couple of weeks. And I mean, specifically, you're referring to the resources sector of the market, which is where we've seen some unbelievable moves. Stuff I've never seen in my career before. Kumba yesterday was up 34% for one day. That comes on the back of a move where it's moved up, I think, over 350% off its January lows. That was only 6 weeks ago. So it's been unbelievable. Iron ore was up 19% for the day yesterday, the biggest single day move ever for iron ore. When you've got moves of that magnitude happening, I mean, that type of volatility is just crazy. If you're on the right side of it, it's awesome. If you're on the wrong side of it, you can get your head absolutely taken off. And I know I've made this point on the show before, that there must be people out there making money in this market at the moment because there's so much movement happening, and surely there are people on the right side of it. But I'm also hearing a number of stories of people who've been very much caught on the wrong side, being short the resources, short the top 40, and have been absolutely carried out on those kind of trades. So where do we stand in this? Well, you know, our portfolio.
Well, we are sort of short the top 40.
We are sort of short the top 40 in the sense that we've got an option structure on, and we'll talk about that in another show again because I haven't got any detail on it here today. But it's kind of one of the reasons why I like trading the top 40 and trading the short side of the market via the option structures, because if you're naked short in the market and it goes up like it has now, it's gone up 4,500 points in 7 days. Well, you get caught on the wrong side of that and you're absolutely out. You know, you're absolutely carried out. Whereas with options, the way we've structured it, it does kind of give you a little bit of flexibility. So you've got the ability to participate on the downside if the market goes lower, but if it does go screaming higher, well, we've got some level of comfort. Having said that, our option structure starts to lose money for us above 47,000 on the top 40. So we need to be a little bit careful of that. Anyway, we'll discuss that more on another show. What I've got here is a chart of the top 40 spot, as we always do at the beginning of most shows. We look at the bigger picture, and we look at how the top 40 is looking on our market to try and make some sense of it. And last week, and many weeks before that, I've come along and I've said, well, we've got this big 2-year lateral support level at 41,500. The market bounced off that in January. It got close again in February, but then it's turned around and it's moved aggressively higher. Last week, I identified this parallel channel over here, and I said there's a possibility that that could be a bear flag forming, which might break to the downside. Well, you can see clearly I got that very wrong because it's gone completely in the other direction. And it's rallied from 42,000 up to close to 47,000 now in, well, from the last time you and I sat here talking, which is a week ago. So it's been an incredible week on the top 40. Where do we stand now? Well, this 46,700 area is quite a little bit of lateral resistance over here on our top 40. We are very overbought, both on the stochastic and on RSI, which is not shown on this graph. So one would think that this is an area where we could probably expect some consolidation to set in, maybe a little bit of a pullback, and then we'll see from there. But a market that runs nearly 5,000 points in that short space of time, it'll inevitably have some sort of a breather along the way.
I mean, just one more comment on the general market before we talk about some of the individual trades for the portfolio. Given that it's such a short space of time, it looks really dramatic. But if you think about it, we're only kind of making back the losses of the last year or so. So they're happening really quickly. But we're still nowhere close to the October peaks of last year, for example. I mean, how, you know, so are we being over, because we kind of got used to a negative and bearish mindsets, this rally has taken us by surprise, and therefore we don't believe in it. I mean, you know, is that bias then something that actually one has to check oneself for?
I think that's right, and it's funny. That's often how a new bull market might start. You get these massive moves up, and suddenly nobody believes it. It's got to pull back, surely. And that's kind of might be what we're seeing in the resources sector at the moment. I'm not convinced yet. I'm not sure that things fundamentally have changed enough in the resources sector to warrant a lot of further upside from these levels. My own gut feel is that we're going to see a lot of volatility on the resources index this year still, and we'll talk about that more later during the show. But also keep in mind, in terms of our overall market, and particularly in terms of this top 40, we've got a very much a divided market, and we have had for a number of years. We've got the resources sector on the one hand, and then we've got the financial and industrial sector on the other hand. And historically, it's always been all about the financials and industrials outperforming the resources. And now, suddenly it looks as if this whole thing is being jumbled up, and the resources are now beginning to outperform, and the financials and industrials are actually the sectors that are underperforming.
Okay, well, as you said, we'll flesh that out just a little bit later in the show. But let's have a look at some of the trades that you've put on for the portfolio. You talked about taking very short-term trades last week, and it was a long position in Bidvest. Now, how did that actually work out, given what's happened subsequent in the last couple of days?
It worked out for us, but I must say we were quite lucky here. What I identified last week on the show was that this was a 30-minute graph of Bidvest, and I said it does help you to drill down into the lower time frames in this kind of volatility and to try and trade the market on a shorter time frame. So we did that with this Bidvest trade, and what I said was that we had this bull flag pattern, and that if one took the height of that the flag pole structure and projected that up from the breakout, then that would give you a target of around about 370 Rand a share. So we went long for the portfolio at 360 Rand with a stop loss of 354, and we were looking for a move up to 370 here to take profits. And we got that. You can see the following morning, actually, after we did that trade, we bought there on the breakout through the top of that flag structure. It got up to 372 Rand, I think, was the high, and then it very quickly and fell away. And and this is in a market that's actually been quite strong overall. Yeah. So this share is underperformed, but nevertheless, we got out with a profit in this stock. And as I say, I think we were fairly lucky, actually, because what's happened subsequently is that the share price has fallen away.
I mean, did you get out where you wanted to?
Yeah, well, our target always was to get out at 370.
So you sold at 370?
Yeah, we got out there. There was an order in to sell at that level. And the profit that we had made, therefore, was 3,416 Rand once all transaction costs have been taken into consideration. So at least it's nice to chalk up a winner here. And in actual fact, this is our first winner for 2016 for the year to date, and it's the 8th of March. So it's certainly taken some time, and it's been a tough start to the year. Not easy, clearly.
Garth, but on the other side of the coin, there was the short position in Cashbuild, which has probably not worked out.
It hasn't worked out, unfortunately, and we've had to stop this trade out on the move higher. So what I'd identified here is that the share price had been forming this rounding top type of pattern. There was all this lateral support here, which was at around about 295 to 300 Rand, that sort of zone. You can see it quite clearly there. When the share price broke below that lateral support line, I thought, well, then that is indication that the top is in and it's probably going to go lower. And you stack that up with the weak economic outlook in South Africa, et cetera, I felt like there was fairly good justification for a short trade here. So we did go short of 130 CFDs at 290 Rand and 45 cents. Okay. Very small position, that. But nevertheless, I felt it was worth doing. And for a while, we were looking good. The share price did move lower. We were making a mark-to-market profit for a while. But what's happened recently, as you can see, it's actually broken back up above this 300 Rand level. And that, for me, was a signal to say, you know what, let's rather get out of this trade and exit. We're not on the right side of this thing. And the trouble with Cashbuild, as I've learned the hard way, it's actually a very illiquid stock. And it's not a share we should really be trading because it is too illiquid. When you're trading, you want shares that are very liquid, you can get in and out of easily, and Cashbuild is not one of those. So I think I've learned a couple of lessons here.
Yeah, so, okay, so what was the extent of the loss there on Cashbuild?
Yeah, so there we lost 2,345 Rand, inclusive of costs. And keep in mind, because we were short here, when you're short a CFD, you actually earn interest on the CFD. So we earned a little bit of interest along the way. Not much, but we earned something. And so that was the net loss after everything was taken into consideration. So not a big deal. It's less than 1% of our capital available to us. The trade is closed, and we walk away and look for the next one.
Yeah, I mean, it's disappointing, but you can't let these things, because it's, as you say, it's been a tough start to the year. So I suppose you have to keep quite mentally strong at this point. Yeah. Okay, so talking about mental strength, we need it for the next chart, especially if you are not involved in what's happened to the resources sector. So talk us through those charts you've got there.
Yeah, well, this is a breakdown of the top 10 resources stocks on our market. and the movements that we've seen for the year to date and then since the January low. So the middle column there is the year to date move, and since the January 2016 low. That's really the column I want to focus on, because that is where we just see some absolutely remarkable moves.
Yeah.
I've listed them in order from best to worst, if you can say any of those are worst. Lonmin up 389%, Kumba up 359%, Assor up 212. I mean, these are just unbelievable numbers, and this is all. These moves have happened since the second week of January. So we're talking about, say, 7 weeks worth of trade here to get these kind of moves. It's unbelievable. I've never seen anything like this in my career.
I mean, one could say, people like Pitfall Yun would say that the moves downward were unbelievable and were not justified. And what we're seeing here is simply a justification for an exaggerated fall that has been experienced by the resources stocks. But I kind of wonder, especially in the case of a Lonmin, what has changed that is so much better for the company? And I really, personally, can't see it. Yeah,
I think in a case like Lonmin, it's difficult to see what has changed. But for some of the others, like the Kumba and the Assor, for example, you have seen a fairly big jump in the iron ore price. And what you've got to remember is that these companies became so marginal at those lower commodities prices that any small move up in the price of the underlying commodities was likely to translate into a very, very meaningful increase in marginal profit for these companies. So that's part of the reason why you've seen these moves up. But I think the bigger reason is probably because we've seen very, very aggressive short covering in these stocks. No doubt they've been heavily shorted over the last couple of years because they've been such big underperformers. And when you have everybody suddenly needing to exit the shorts at the same time, you get these tremendous short squeezes.
Yeah.
And that's why we would have seen something like Kumba up 34% yesterday and Lonmin up 20% yesterday. That is classic short covering, and that's a short squeeze to me.
And as far as the line chart is concerned, because we did refer to the Resi 10 Index at the beginning of the show, what are you seeing there?
Well, that's it. So we can say those are the moves we've had for the year to date and since January and so on. But where do we stand now, and what does it look like going forward? This is the chart of the Resi 10 Index, so made up of the top 10 resources shares. I must say that this index is heavily weighted towards BHP Billiton, Sasol, and Anglo American. Those three shares together make up 65% of the index. So very, very stacked towards those three shares. What's interesting is that we did have a big inverted head and shoulders pattern evident over here between December and February. The break above the neckline there was bullish, and that projected it move up towards about 32,000 on the Resources 10 index. We've got that now. We've reached that target, and that's a minimum target. Also, just keep in mind from a Fibonacci perspective, if I take that move from the swing high in October last year to the swing low in January, we've rallied 61.8% of that move down. So this is an area where we're starting to see a number of that short-term target's been met, the Fibonacci retracement has been met. Also interesting to note is have a look at that downtrend that goes back to April of last year, and you can see that downtrend also comes in at around about the same sort of area. So what I'm saying is that there is a fair amount of logical resistance here in this 32,000 area, and if I stack that against the capitulation blow-off type of move that we've seen in a number of the resources shares yesterday, my suspicion is that we're probably at an area here where we're likely to see a bit of consolidation in the sector and maybe a bit of a pullback. But I do think there's a good chance that we've got that the low is in for the resources shares now, and that we're probably going to see ultimately the market build on these gains. But I think in the near term, I wouldn't be chasing the resources now. I'd rather wait for the next pullback. Perhaps we get a pullback towards the neckline of this inverted head and shoulders pattern down here, and that very well might line up a buying opportunity. But we'll monitor that as and when it comes.
Yeah.
But for now, I think I'm just, we're not chasing resources.
Yeah, and I suppose if you've missed it, well, that's life, unfortunately.
It is, and that's it. And if you've missed it, well, unlucky, but don't compound it with another mistake in the sense of chasing them right now. I think, be patient, wait for the pullback. You probably will find you get a better opportunity down the line.
Garth, very quickly to end off with, what does the portfolio look like?
All right, so we're down 2% for the year to date, as I mentioned. We've got 244,000 Rand in the account. Those are the positions recently that we've had. Bidvest, we made a profit. Cashbuild, we closed out for a loss. And then we've still got that option structure running out to June, which we'll talk about on another show. Not very exciting, but at least 98% of our capital is still intact.
You've got to look on the bright side. Garth, we have to leave it there. Thanks as always for joining us on the program. Garth McKenzie is founder and editor of Traders Corner.